Hey, welcome. So let's forget all the get-rich-quick stuff for a minute. Today, we're diving into something way more powerful, actually taking the wheel of your own financial future. We're going to show you how to go from being a passenger to being the pilot of your own investments. Let's get right into it. This quote right here, it really hits home for a lot of people, doesn't it? You put your money into a 401k, maybe a mutual fund, and you just hope. You hope it goes up. You hope your financial guy's on top of things. That feeling of being totally out of control, just a passenger along for the ride, that is the exact frustration we're going to tackle today. So, how do we get from that feeling of frustration to a feeling of real empowerment? Well, we've got a roadmap for you. First, we'll talk about this illusion of control. Then, I'll introduce you to a really powerful framework called the 4 pillars. We'll break those down one by one, get you the right toolkit, show you how to build actual cash flow, and wrap it all up with the investor's mindset, which is absolutely crucial. All right, let's start with that feeling, that little bit of anxiety in the back of your mind. You're told you have a diversified portfolio. And yeah, that sounds really smart, but for so many of us, it just means you're a passenger in a car you don't really know how to drive, heading to a destination you can only hope you'll eventually reach. And you know what? Here's the real root of the problem. It's what we call boilerplate investing. You answer a few basic questions, and poof, you're handed this cookie-cutter portfolio. The thing is, it's designed to be easy for the advisors, not necessarily the best for you. And it usually means your investments just mimic the market. They're up when it's up, and they come crashing down when it crashes. You have practically zero real control. This slide right here really gets to the heart of it all. The standard approach, it's all based on hope. You just hand your money over and you hope for the best. But a control-based approach, that's a completely different ballgame. It's about making your own educated decisions, understanding why the market is moving, and having a personal strategy. And here's the kicker. It's about creating cash flow now, not just waiting around for some far-off retirement date. Okay, so to get from hope to control, you need a system, right? A logical framework that can guide your decisions. And that is exactly what the 4 pillars are all about. This isn't about guesswork. It's about having a solid, repeatable process. And let's be super clear about something. This is not about being some frantic day trader glued to a screen biting your nails. No way. It's actually the opposite. It's a calm, logical system for making smart, educated decisions for the long haul. It's all about building a foundation of knowledge so you can really, truly take control. All right, pillar number 1, fundamental analysis. The easiest way to think about this is like buying a house. You wouldn't just look at the nice paint job, right? Of course not. You'd get an inspection, you'd check the foundation, look at the neighborhood. You investigate its health. Is a company's profit strong? Is its debt under control? This is about knowing exactly what you're putting your money into. Next up, pillar 2, technical analysis. So if fundamentals tell you what to buy, technicals help you figure out when to buy. It's all about reading the charts, seeing the story of supply and demand playing out, and spotting the trends. It's kind of like learning to read the market's mood. Now for pillar 3, cash flow. And folks, this is a real game changer. Think of it like owning a rental property. You don't just hope the house price goes up. You want that rent check every single month. That's cash flow. With the right strategies, you can generate actual spendable income whether the market is going up, down, or even just sideways. This means you can find opportunities in any kind of market. And finally, we have what might just be the most important pillar of all, risk management. This is your defense. This is your seatbelt. It's all about deciding your exit strategy before you even get into an investment. You know exactly what you're going to do if things go wrong. This is how you protect your hard-earned money and actually sleep at night. Okay, so those are the 4 pillars. But I get it, they can still feel a little abstract. So let's make them real. We're going to use a couple of really simple analogies that will make these powerful ideas just click for you. Okay, how great is this? The Seinfeld principle for technical analysis. Just think about it for a second. Every episode of Seinfeld has these reoccurring plots and themes, right? The details might change, but the core ideas repeat. Well, the market is a lot like that. History doesn't repeat itself perfectly, but boy, it sure does rhyme. Technical analysis is simply learning how to spot those recurring patterns in the market's story. This is such a powerful way to understand risk management. Being in a typical mutual fund is a bit like being a passenger on the Titanic without any lifeboats. You're just hoping the ship doesn't sink. See, you can't control the iceberg, just like you can't control the market. But an empowered investor, they always have a lifeboat, a pre-planned exit strategy. You can't control the ship, but you absolutely can control how and when you get off. That right there is the very essence of risk management. So, the philosophy is starting to make sense, but I know what you're thinking. That leads to the biggest question of all. Okay, this sounds great, but how do I actually do any of this, right? Let's get practical. To put these 4 pillars into practice, you don't need some fancy Wall Street degree. Nope. You just need a few essential, totally accessible tools. This is your personal toolkit for taking real action. Let's break these down real quick. First, you need a discount brokerage account. Just think of it as your own personal gateway to the stock market. It lets you place your own trades. Second, you need charting and scanning software. This is like your personal research assistant. It can sift through thousands of stocks in seconds to find the very few that match your specific rules. And third, a trading journal. This is your playbook. It's where you write down your decisions, what worked, what didn't, and most importantly, why. I love this quote because it gets right to the core of what creates long-term success: discipline. Your journal isn't some diary for your feelings. It's a tool for accountability. It's how you learn from your wins and your losses, and it forces you to stick to your own rules. It is the single best way to measure your progress and actually get better over time. So we've got the framework, we've got the tools. Now, what's the whole point? Well, for a lot of us, it's not just about watching a number grow on a statement that you can't touch for 30 years. It's about creating spendable income right now. It's about building real cash flow. And this is how you do it. This concept is called the wealth wheel. Look at step 1. You use your analysis to acquire an asset, like a good stock. Step 2, that asset generates cash, like a dividend. Now, step 3 is where the magic really happens. You take that cash and you reinvest it to buy more assets. And guess what? Those new assets then generate even more cash. You just keep that wheel spinning and your income stream starts to compound on itself over time. Okay, we've covered the strategy, we've covered the tools. But honestly, none of it works without this final piece of the puzzle: having the right mindset. This is all about looking at investing as an educational journey, not as a trip to the casino. This education continuum is a perfect way to look at it. Most people start at square one: ignorance. That's that hands-off 401k approach. But here's the cool part. Just by watching this, you've already made the leap into phase 2, awareness. You're learning the lingo, you're learning the strategies. From here, the path is clear. You start applying the rules to gain competence, and then with time and experience, you get to proficiency. That first step you just took, it's the most important one. So I'll just leave you with this final question. It's a big one. Are you actively building your wealth, or are you just hoping for it? The traditional path is one of hope, but the path we've talked about today is one of building, actively, deliberately, and with control. The choice, well, that choice is all yours.